lot of disturbances, so we'll begin again with a small and quick introduction. Okay. Very good morning, everyone. This is Dr. Sanket Charkha from Senior Institutes, Pune, Savitribai Phule Pune University. We have started with the concept of economics, and in terms of economics, we have started with the fifth chapter of economic analysis of business decision with respect to consumption and investment function, wherein we have seen a correlation between how income is being generated or derived to a particular individual, how it gets converted in respect of a demand, that is desire backed by a purchasing power, and how the particular person is spending that certain sum of money on the various products, commodities, services that is required for him over a period of time. So here in this case, we have to identify what is the income level of one particular individual, what is the consumption from that is, what are his wants, need and desire, and what product or goods and services that he needs, and how he wants to satisfy his requirements. And based on this satisfaction, the product or the goods are made available into the market, and accordingly, he starts spending a certain sum of money on those products, goods, commodity or services. The components of this particular chapter we have already seen, and with respect to the theories of business cycles. Key concepts to note, we have seen what is consumption, what is investment, what is savings, and what are the various determinants of all these three factors. Definition and meaning with respect to the consumption and the types of consumption. So in terms of types of consumption, we have seen two types. That is, the consumption is divided into two factors, that is direct consumption and indirect consumption. Direct consumption is that consideration wherein a particular individual gets a benefit directly, and accordingly it is satisfying the need, want or desire of an individual in a direct way, and it is satisfying or fulfilling the habit or need or requirement of a particular individual very immediately. So any consideration, any product, any goods or some commodity which is satisfying the need of an individual very immediately or directly one-to-one on the immediate basis point of time, then such type of consumption is called as an direct consumption. That is, for example, whenever you are thirsty, then what you can do, you can immediately go and you can purchase the water bottle or a cold drink, and you can satisfy a need, want or desire immediately. Or for example, when now this is the example of your direct consumption. Indirect consumption, now indirect consumption, for example, you are thirsty and you are desperately willing to drink only chilled water or only cold water. Now here in this case, whenever I say specifically or preferably that I want to drink chilled water or I want to drink cold water, and what is the consideration? That what do I need to do? I need to first thing I need to purchase a water. That particular water needs to be kept in the refrigeration. I need to wait for 15, 20 or 30 minutes so that the water gets cold or the water gets chilled, and then I can consume that particular water. And for satisfying this particular need or want, what is the medium, what is the source? The refrigerator or the particular cooling machine that is available, that acts as a medium, or that acts as a mode for your satisfaction of your want, need or desire. So in this way, the consumption can be a direct consumption or the consumption can be an indirect consumption, wherein after a point of time or with additional supportive to some other products or some other commodities or services, your satisfaction of need, want or desire can be undertaken. Got with this example of consumption of water. What do we mean by direct consumption and indirect consumption? Any difficulty at this stage? Anyone? No, no one is responding. Okay. Then we also seen the basic circular model of the households and businesses. That is how the various different types of household, that is with respect to either whether you deal the definition of a household as a micro perspective or the macro perspectives, and how they are spending on certain goods, services and commodities, and in return what the businessmen are doing, the businesses, that is the industry or the manufacturing sectors, they are trying to manufacture those commodities, and it is again supplied back to the households. So it is a complete cycle or a circular model wherein the need or want or desire has been generated by a household, that has been processed by the businessman, wherein he applies the factors of production. On the basis of factors of production, the manufacturing activity, production activity takes place, and accordingly the need, want and desire of a household is been satisfied or it has been fulfilled. Okay, so now today we are moving towards the next point or next chapter is why is consumption important. So in this case, now whenever we are saying that consumption function is directly related with the investment, we need to first understand why do we need to study, or why do we need to take into consideration the consumption as the major function. So why there is an importance. So consider now we are taking for a certain example wherein what is the consideration, that is whatever thing that is either a need, want or desire, that is whatever you are willing to purchase, what you have to do, you have to take efforts to purchase that particular commodity or to consume that particular commodity. And whenever you take certain efforts for that particular consumption or that particular acquisition, then accordingly you get satisfied and accordingly your wishes are being fulfilled. For example, you are wishing that you need to travel to Europe. When I say that I need to travel to Europe, it is not very much easy to travel to Europe. That is, from Pune to Europe, the traveling is very difficult. Why? Because the distance is thousands of kilometers from the distance from the two places. Now, for this consideration, what do I need to identify? Whether it is a direct consumption or whether it is an indirect consumption. Now, first thing that I can do is, for example, direct consumption. Direct consumption, how can I do? That is, I can directly go to Europe. I can cancel my that particular plans. I cannot go to that particular location because it is very far away. This is the direct consumption. That is, either you can fulfill it or either you cannot fulfill it. Indirect consumption. Now, what we have identified, that the distance between Pune to Europe is around 1,000 or 2,000 or 10,000 kilometers. Now, in order to travel this particular duration, what are the various options for you? You have to avail either one of the options. That is, either you can go by roadways, either you can go by airways, or either you can go by railways or seaways. So these are the four options that are available for you, and you need to find out which option is best suitable and affordable and comfortable for you. So what we are doing, we are taking efforts to satisfy our want, to satisfy our desire. So what was my desire? My desire was to travel from Pune to Europe and I need to reach that particular destination. So what am I doing? I am taking different efforts for those consideration. Now, after a point of time, what happened? My efforts was successful and I have identified a particular location. That is, I will be traveling to Europe by airways. Now, when I mean to say that I need to travel to Europe by airways, then what do I need to do? I need to book a ticket of a particular flight. Now, in order to book a ticket of a particular flight, what do I need to find out? I need to find out which is the nearest airport. That is, whether the flight to the Europe is available from Pune, whether it is available from Mumbai, whether it is available from Delhi, Hyderabad, Chennai, and so on. So from which location the destination flights are available. For example, the flights are available not from Pune, but they are available from Mumbai. So what do I need to do? Again, my efforts increases. Now here, a particular want, a particular desire, always it is followed by a certain effort that you want to take for. Earlier, what was our travel duration? Our travel duration was from only from Pune to Europe. Now, but if the flight is not available from Pune to Europe, then what do you need to do? You need to additionally increase your journey. That is, the first thing, you will be traveling from Pune to Mumbai, then you will be traveling from Mumbai to Europe. That is Frankfurt or whichever Germany, whichever airport that you want to go for. So here in this case, what happened? Our efforts are increasing. The next thing you have identified, yes, you are comfortable that you will be traveling from Pune to Mumbai, Mumbai to Frankfurt or Germany or Europe and so on. And accordingly, you have planned your destination, you have planned your dates also. That is, on 1st of August or 1st of September, you want to travel to Europe and by airways. Now, when you say that you want to travel to Europe from the airways, what do you need to do? You need to purchase a ticket. So in order to purchase a ticket, what we want to do now, when I say that I want to travel, I need to pay a certain amount to a certain vendor. Why? Because he's not doing a charity, he's not providing a certain service wherein he will be taking me to Europe free of cost. So here in this case, what is the consideration? Again, monetary perspective. That is, I need to pay a ticket of rupees 40,000, 50,000, 1 lakh rupees, and so on, depending on which class I want to travel for, whether it is business class, whether it is economy class, and so on. So I need to categorize my product. So the product is available with the person, that is with the service provider, that is the flight attendants, that which airline you want to travel for. Among that particular airline, which class you want to travel for, and accordingly the rates are differing. For example, I have selected the business class, and the business class ticket for Europe traveling is 1,50,000. Now, when I say that I want to travel by business class to Europe, that is, what am I doing? I am identifying the just ticket fare from Mumbai to Frankfurt or Mumbai to Germany or Mumbai to Europe. Again, I need to identify what is my traveling expenses from Pune to Mumbai also. So from traveling to Pune to Mumbai, that is 5,000 rupees. And from my home to that particular location, a total of 5,000 is been identified. So what is my total cost? It becomes 1,55,000 just for the traveling expenditure. Now, furthermore, what do I need to do? I need to find out what commodities, what products I need to carry with myself. That is, I need to carry clothes, I need to carry certain food articles, I need to carry my laptop, I need to carry any of the gadgets and so on. So what we are doing, we are trying to identify what are the various efforts that have been required in order to satisfy a particular need. What was our need? It was a direct consumption, that we want to travel from one place to another place, but that is not possible because it is having certain different commodities. The direct traveling to Europe is not possible because there are certain hurdles into it, and hence we are taking the mode of indirect method. So based on the consideration of the indirect method, various components, various constituents have been taken into account, and then the need, want, or desire, it has been satisfied or it has been fulfilled. So here in this, now for example, we have identified the ticket. Now what was my total expenses? For example, my total expenses goes to rupees 1,70,000. Did I mention anywhere that I am having 1,70,000? No. So here what we have to do, the customer or the particular consumer or the particular person who wants to avail these particular services, he wants to, first thing that he needs to do is he needs to earn that particular sum of money. So whenever we say that he needs to earn a certain sum of money, that is, for example, my salary of a particular individual is 1 lakhs per month. Now here in this case, 1,70,000 means he needs to at least work 1 month and 20 days or for a period of 2 months, and then he will be only able to pay that particular sum of money that has been required for traveling. So his 2 months of salary, that is 2 lakhs of amount, will be required, out of which 1,50,000 he will be paying for the traveling and all these particular expenses, and remaining 30,000 will be his savings. So consumption. So what we are doing, we are identifying for undertaking one transaction, for undertaking one activity, for fulfilling one want, need, desire, whatever it is, you need to spend, you need to work for 2 months, and accordingly, whenever the amount is made available with you, then only you can satisfy your want, need, and desire, and then only you can fulfill your consumption, whether it is direct consumption or whether it is indirect consumption. Take an example, for example, that is today is 31st of March and tomorrow it is 1st of April. So what we are doing on 1st of April, that is, it is your monthly practice that you fill your all your grosses on the first day of the month, and accordingly you need to plan your expenses. So how do you plan this particular expenses? Based on the salary that you receive today. So by the end of the day, that is around 4 p.m., 5 p.m., 6 p.m., everyone receives our salary. And accordingly, whenever that particular salary receives, we start we start planning for our expenses for the next month. That is, what amount will be expended for what amount will be required, what amount will be saved, what amount will be invested, and so on. So in this way, all the expenses has to be planned accordingly, and then we have to satisfy, and then we have to fulfill about what is the consumption that has been backed by. So always this satisfaction is derived from the act of consumption. So always whenever we say that we want satisfaction at this particular level. Now, for example, I have spent 1,70,000. I reached to the destination of Europe. I traveled, I roam around on all those particular countries, and I return back to India or my particular hometown, that is Pune. Now here, when I return back to my hometown or to my home place, then here at this stage, what am I doing? I am fully satisfied that what was my desire, what was my need that I need to achieve, I need to acquire, I need to travel at a certain destination. So when I travel to that particular destination, my wish, my desire has been fulfilled, and I becomes satisfied. So here always the want, need, or desire, it is always ultimately aiming for the satisfaction of that particular individual, and for satisfaction of that particular individual, whatever efforts that we are taking, that particular efforts are the part of consumption, which is either the direct consumption or the indirect consumption. Now here, in this case, what happened? Now this example was of an global level, wherein we are moving from one country to another country. But in local examples, that is either for an individual, for a particular family, or a particular household, there are very small requirements, there are very small needs which impact your demand and supply consideration. That is, for example, what is the consideration? That is, if the rates of sugar, if the rate of dals, if the rate of rice, if the rate of wheat and jawar and bajra, if all these product commodity rates are either increasing or either decreasing, it directly impacts your consumption. That is, either you will purchase more of quantity, or either you will purchase less amount of your quantity. So in this way, the demand and supply forces, the rates or changes in the price of the commodities, it directly impacts, it directly affects your consumption level. So for example, in the now in today's scenario, what we are looking for now, if the rates of petrol prices are increasing at a very rapid stage, that is, earlier it was 30, now it came to 40, now 60, now 80, now 100, tomorrow it is predicted that may go to 120 also. So what we are doing, we are just reducing or curtailing our expenses. So earlier the fuel that we were spending for, now the expenditure pattern on the fuel will increase, and accordingly our consumption will decrease. So if the rate of fuel is 120 per liter, then accordingly what we'll do, we will not be purchasing, we will not be fulfilling the tank, and accordingly our consumption will go down in that particular fashion. So here it depends on what is the household, what is the need, what is the requirement of that particular individual, and how he's looking for achieving those factors. Now this particular diagram, so this particular diagram specifically and clearly explains you about the consumption function. Yes, what do you think for? What do you understand from the consumption function, or what is in your basket? So this particular picture clearly explains you about what is the consumption function and what are the various commodities, services that an individual has to consume in a particular month. And it keeps on differing. Yes, can anyone explain? What do you understand by this diagram? Hello? Is anyone there?
Yes, sir.
Yes, sir.
What do you understand by this picture?
Sir, in this diagram, uh, uh, humans different needs are be shown in the cards, books, and if, violin. Means in our daily life we uses different types of our products. Some is our desirable products, or some is our basic products. We need we need that extremely needs. That's like a here is that key, books, cars. In that cars is our means second needs. Means first need is our food, shelter, and water. Some they, and then after we describe here different types of our needs we use in our daily life. So and we expense our money, our income, we fulfill these all types of needs, and that's it.
Based on the consideration of each and every product or commodity, we have to identify, we have to categorize which product consumption indirect. Now, certain expenses are for the compulsory nature, and certain expenses are of avoidable or unavoidable nature. So based on your consumption, based on your need, based on your requirement, we have to identify which expenditure or which consumption is essentially required and which consumption is essentially not required. So as mentioned by you, that is the basic essential requirements of food, clothing, and shelter. So these particular essential needs cannot be avoided. You have to consumption, you have to make the consumption, and you cannot avoid those products or services that have been required. So here in this case, what do we have to see? That what is the need requirement of an individual and what efforts he are taking to satisfy these particular needs. So if the efforts taken for this particular each and every single product or single commodity goes on for a several period of time, then accordingly the economy keeps on growing. Now here in this case, one single individual, you can see what he is demanding for. He is demanding for a pencil, he is demanding for tools, he is demanding for a tractor, he is demanding for a violin, he is demanding for a laptop or a computer, he is demanding for a car, books, wallets, food, articles, and so on. So if a single individual can demand certain such amount of quantity, just imagine what will be the strength of our economy. That is a particular household. Now just I'll take an example, that is there are 5 members in your family. So what will be the total figure or total description of now this particular what I'm depicting, the example is just only for an individual. When 5 people come together, how many products will be required? When 10 people come together, what products are required? When a particular society, now society costing comprising of 700 flats or 1000 flats, that is in Pune we have large amount of societies. So in this case, what is the strength of that particular household? The household strength becomes 10,000. Or a particular city, now the strength of population is Pune, that is more than 2 crores, or a strength of Mumbai, the population of Delhi, and then identify the population of India, that is 135 billion, 135 crores of population. So here in this case, what we need to do, we need to identify how consumption keeps on increasing. as and when the population increases, so accordingly the consumption increases. Only the differentiation is certain amount of goods or commodities they are required very immediately, and certain amount of goods or commodities and services they are required after a point of time, that is indirect consumption. Now here in this case you can see a certain medicine on a particular stethoscope. Now, this particular medicine or stethoscope, it is not required on a very frequent basis. That is, whenever the need arises, whenever you are ill, whenever you are sick, only at that place, the particular requirement will be into existence. You can see an axe, you can see a particular tools and equipments. Now, whenever you want to undertake certain repairs, certain maintenances, only at that particular stage, the expenditure is being incurred. So what is the recurring, what is the nature of that particular expenses? When do we need to incur? When do we need to save on that particular expenses? So this consumption function specifically focus you or majorly identifies about what is the need and how it keeps on circulating. So the consumption function, as the name suggests, has to be dependent on a certain variable. So what are those particular variable? Either a dependent or an independent, direct or indirect, any type of variable. And this particular variable is a comprising of a national income. So what I have quoted earlier, what we have to look for, that is, agar mujhe now explain you this particular example in Hindi. कि अगर मुझे अकेले के लिए एक टूथपेस्ट लगता है and that particular toothpaste is available for a month of 15 days or for a month of for a period of 1 month, just imagine the population of 130 crores, what amount of toothpaste they will be requiring. I am consuming for example 10 biscuits every day. Just imagine the population of 130 billion 130 crores people, what amount of biscuits they will be consuming. A packet of milk, that is, earlier daily I purchased 1 liter of milk. Just imagine what is the amount of milk that is being required. Depending on the income level, I can purchase a car costing rupees 50 lakhs today. Just imagine what will be the strength of the economy, wherein around 2 crore, around 10 crores, around 50 crores of people can also purchase the car costing rupees 10 lakhs on the regular basis. So this, in this way, what we are contributing to our national income. Now, why do we call this particular terminology as a national income? Because ultimately what we are doing, we are employing the factors of production, that is land, labor, capital, enterprise, and resources. Land, always the land is availability, land is the applicability, and the ownership of the land remains with the government, because ultimately if you want to purchase the land or if you want to sell a particular land, you have to approach to the government, you have to pay the respective stamp duty, and then only the purchase or the sale deed can be undertaken. If you want to employ a certain labor, that is either a blue collar job or either a white collar job or a particular executive or a top management, whenever you are employing a particular person in your organization, you need to follow the labor laws that are into existence. So what we have a certain labor laws, we have a certain wages act, and based on the rules that have been set by the government, you have to pay a minimum wage rate also. Now, for example, that certain scheme was there by the government. Have you heard the scheme called as Narega? Mahatma Gandhi National Rural Employment Guarantee Scheme.
Yes, sir.
Yes, sir.
Scheme, what was the applicability? That any person, any labor can go to that particular scheme, that either the Tahsil office or the Sarpanch Karyalay, he can register his name, either a male or a female, and they can get a confirmed employment or confirmed job guarantee for around 30 days, 60 days, and 90 days, depending on the work or task that has been allocated. So under Narega, that is Mahatma Gandhi National Rural Employment Guarantee Scheme, the rate was also been decided. That is, a particular labor will be getting daily 150 rupees, 200 rupees, or 500 rupees per day, depending on the work that he is undertaking. This scheme was applicable for the low-level people, that is working on the ground low reality. Just imagine the people working on the business level, that is the corporates, the industries, the various sectors, and the large-scale organizations or the MNCs. They also have certain laws, rules, regulations into existence. And out of this, now you will be saying कि यहाँ पे इसका core relation क्या है? What is the correlation between the income of a particular person and the person and the government? So here, what the government is doing, based on the your income level, what the government is doing, the government is charging you a tax rate. That is, if your income is at the rate of rupees 2,50,000 or 3 lakh or 5 lakh or 10 lakhs or 20 lakhs, they charge you a rate of taxation. That is either 10%, 20%, 30%, and so on. So here in this case, it is contributing to the national income. So as if the income level of the people starts increasing, so accordingly what happen, the consumption pattern of the people also increases, the need, want, desire, requirement of that particular individual also increases, and accordingly the taxation policy of the government also increases. So there is a direct availability of funds with the government. So that was the concept of land, labor, capital. Now, in terms of the capital, what we are looking for now, whenever we want to start any business that we want to start for, we need an amount of capital. This particular capital can be raised by the individual, that is a person who is the owner of the business himself, or he can raise from the government sources. That is, he can go to a particular bank and the particular fund or money can be raised from the banking perspectives. So here in this case, now what is the situation? Now, if you are approaching a particular bank, that is you approach State Bank of India or you approach State Bank of Hyderabad or Punjab National Bank or Central Bank of India, which are nationalized banks. So if you are contributing a certain amount of money from the nationalized bank, then what the bank is doing, the bank is charging you the rate of interest. That is either for the business loan, for the personal loan, for the entrepreneurship loan, and car loan, home loan, house loan. There are different types of loan that you want to avail for. So whenever you take a particular loan, the bank is giving you the fund, the bank is making the provision of the funds or money for you, but in return, they are charging you a certain sum of money. And that particular sum of money that has been charged for you, it gets directly deposited with the bank, and the bank initially gets deposited with the Reserve Bank of India. So ultimately, Reserve Bank of India being the contributor to the national economy, again, in this case, what happened? The national consumption keeps on increasing, and accordingly, it benefits the national income. So a general consumption is function of your income, that is Y. So as and when your income increases, accordingly your consumption also increases. For example, today, that is today you are living in just one room. Identify a particular situation, that is when you came to Pune. When you came to Pune, what happened? Where there are few number of students, they were living on hostel. And that particular hostel room was on sharing basis. That is, in a particular room, there were around 2 partners, there were 3 partners, and around there were 4 partners also. That is, 4 people used to live in a single room or 2 rooms. And accordingly, in that particular hostel, you used to survive. And accordingly, you were spent that particular time for 2 years. After a point of time, you have taken admission at a Skinsually, you get placed very immediately, you get a very good job, and accordingly, you are placed with a certain company called, now we have an example, that is Mr. Saurabh. Mr. Saurabh got selected and placed in a certain company that I don't remember the name. So, and accordingly, he started working. Now, when he came to Pune, there was no income for him. Now, when he joined that particular company, his stipend was rupees 5,000. So every month he started to earn 5,000 rupees. Now, what happened? There was additional income available with him. Earlier, the family members used to give him 5,000. Now he's earning 5,000 of his own. Now what happened? He's having 10,000 rupees per month available at his location, that is into his bank account. So in a further stage, what happens now? He don't want to live in that particular hostel. He takes his flat on a particular rental basis, and accordingly he switched to a particular new flat. Earlier he was staying in Vadgaon. Now he moves to Vadgaon. Now he moves to a different area, that is on Sinhagad Road or a Deccan or any of the area, and accordingly his standard of living starts increasing. Again, after a point of time, when the final placements comes into a picture, accordingly he gets a final placement and his salary increased, and he gets a job of rupees 3 lakhs, that is CTC, annual CTC, or a pay package of 3 lakhs. So again, what happened? His salary becomes 20,000, 25,000. So your income level starts increasing. So earlier a person was staying in one room. Now he has taken one RK, that is one room kitchen. Now again, when his salary increased, again he has taken 1 BHK, and accordingly what happened? Your income, if it starts increasing, your consumption also starts increasing. Earlier he was living individually. Now his family, now he recently he got married. His wife is also there with him. Again, he got a certain children, a particular boy and a particular girl, and his family starts expanding. So what happened? His consumption at the hostel, his consumption was very limited. That is, 5 kg of rice was sufficient for him for a particular month. Now, when the family starts expansion, he needs 15 kg or 20 kgs of rice per month. So here in this case, what happened? Accordingly, when your income level increases, so accordingly your consumption also starts increasing. That was the example for just one single individual. Just imagine when different types of people, different types of several participants or the constituents of the economy, that is around 130 crores of people start spending a certain sum of money, how they will be contributing to the national income. So a general consumption is function of your income. So accordingly, always the consumption function, now it's focusing on the macroeconomics perspective, that is a bigger perspective. Earlier, when the initial stage, when we were dealing with the household perspective, we were focusing on the microeconomic perspectives, but whenever we are going for a national income perspectives, that is at the global level or the national level, then we have to consider a situation of the national income, that is for the macroeconomic level. So C is equal to A plus B into Y. So mathematically, how does this formula relate? So C is equal to A, where A stands for subsistence or minimal level of consumption. So minimum amount of consumption, what has been required for you? B, that is marginal propensity to consume, and Y stands for your income, and C is total consumption expenditure. So your expenditure for a particular product, for a certain commodity, for a certain household, for a certain individual, or for a certain society, or for a particular certain nation, it depends on which factors. First thing, the minimum level of consumption, that is what is the basic essential need or requirement of one particular individual. That is, if your salary is rupees 50,000 or rupees 1 lakh, or for example 50,000 per month, then based on this consumption, what is the basic essential need that for a specific month your fixed consumption or your fixed expenditure will be rupees 20,000. That is, whatever may be the changes in the economy, whether the economy is increasing, whether the economy is decreasing, whether the prices are high, whether the prices are low, at least 20,000 is required for a particular individual to fulfill his needs for a particular month. So here in this case, minimum level of consumption, that is your subsistence level. So first thing that we need to do is first thing we need to identify what is the minimum level of consumption of a particular individual की हर एक आदमी को कम से कम कितना पैसा लग सकता है. या अगर मैं कहता हूँ कि मुझे एक दिन का गुजारा करना है, मुझे 1 मंथ का गुजारा करना है, तो वो एक महीना निकालने के लिए मुझे मिनिमम पैसा कितना लगेगा. मेरा रेंट कितना है, मेरा फ्लैट का EMI कितना है, मेरे ग्रोसरीज का रिक्वायरमेंट कितना है, मेरे क्लोथ्स की रिक्वायरमेंट कितनी है, मेरे इलेक्ट्रिसिटी, टेलीफोन, मोबाइल चार्जेस वगैरह वगैरह सारे चार्जेस कंज्यूम करने के बाद what am I doing? I am spending 20,000 rupees for a particular person or a particular family. So this is your minimum level of consumption. Plus what has been added with it, the marginal propensity to consume, that is MPC. So marginal propensity to consume is till what level you can extend your consideration, or till what level you can extend your amount of expenditure. That is, now what is the consideration? That is, if your salary is rupees 50,000 and the expenditure is 20,000, then the remaining amount available with you is rupees 30,000. Now, out of this 30,000, what do you want to do, or what is your priority? Now, based on this particular slide, what do we need to see? We need to identify what is our priority. Whether do you want to go for books, whether you want to go for car, whether you want to go for medical, whether you want to go for your consideration of your music, laptop, and so on. So what is your priority? So based on your priority, you identify what is your marginal propensity to consume. So which expenditure is important, which expenditure is not important, where to spend, how much to spend. All these particular calculations are completely dependent on your MPC, which is multiplied with the concept of your income. So based on your income level, you have to decide about what percentage of your income you want to spend on that particular commodity or that particular service. For example, one of this particular concept I have taken is investment. Now, in terms of investment, I mean to say that I want to invest in shares, I want to invest in debentures, I want to invest in mutual fund, I want to invest in PPF, and so on. So here in this case, what is the consideration? What is the example? That if I say that I want to invest in mutual fund, then what percentage of income? What was my income level? My income level was 50,000, which has been reduced to rupees 30,000. Why? Because 20,000 I am spending on my daily needs and requirements. Now, out of this 30,000, what percentage I need to save, or what percentage I need to invest? Investing was one of the avenue, was one of the example that I've taken for. So here in this case, what we have to see, that we have to identify what we are looking for and what is the priority and what is the amount that you want to spend for. So a certain percentage on that particular level. So for example, I say that 10% of amount, 10% of amount available with me, I want to spend on mutual fund. So 30%, 30,000 ka 10%, that is 3,000 I will be spending on mutual fund. 20% on my insurance, that is 6,000 I will be spending on my insurance policy. So here in this case, every month expenditure has been identified, and then you come to a certain conclusion about what is the total consumption expenditure of an individual. So total consumption expenditure of an individual, that is C is equal to A plus B. What is A? A is 20,000 plus B, that is a certain percentage. 3%, sorry, 10% of 10% for mutual fund and 20% for LIC. That is 3,000 plus 6,000. So what does it come? 6, 7, 8, 9. So it becomes 29,000. So what is my total consumption expenditure? Total consumption expenditure for Mr. Sanket will be 29,000, and remaining whatever amount that is available will be the complete savings for that particular individual. That is 21,000 or whatever, depending on what calculations you are making for and how you are making the investments. So in this way, the consumption expenditure is been calculated, and you need to identify how much individual is spending and how, in what way he is spending a certain commodity. Clear with this example? Any difficulty or questions you would like to ask? You can please unmute yourself and ask me.
No, sir.
Gopal, Aarti, Manasi, anyone? Soham, Rishikesh, Dada, I cannot see the name.
No, sir.
No, sir.
Moving ahead. Oh, already the explanation is given for you. You can read it. Will not take it again. MPC, marginal propensity to consume, the proportion of an aggregate raised in that pay that a consumer spends on the consumption of goods and services as proposed to its saving. Marginal propensity to consume is present in Keynes' consumption theory and determines by what amount consumption will change in response to a change in income. So, in response to your income, what your income, investment amount or your consumption amount is been changing. So, depending on the amount available with me. Now, in my earlier example, what happened? In my earlier example, there was lot many amount available with me. That is, my expenditure was only 20,000 and my remaining amount was rupees 30,000. So what can I do? I can extend my percentage. I can invest a certain sum of money. My marginal propensity to consume to invest in mutual fund can be either 10%, 20%, 30%, 40%, or even 100% also. That is, entire 30,000 I can invest in a particular consideration that is only on mutual funds also, or a certain portion I can invest in mutual funds also. Considering one of the factor that I am considering mutual fund as one, investing as one of the factor for my MPC, that is marginal propensity to consume. So here in this case, what happened? It differs from an individual to individual. Suppose an employee receives a rupees 500 bonus in addition to the annual earning, they now have rupees 500 more in that income that they did before. So if they decide to spend rupees 400 of this marginal increase in income and the saving remaining rupees 100, the marginal propensity to consume will be 0.8 rupees 400 divided by rupees 500. So your marginal propensity to consume. So out of rupees 400, out of rupees 500, if you are spending rupees 400, then what will be the consideration? That is your marginal MPC will be 0.8. That is 80%, and remaining of 10% will be the amount of savings with you. Clear with this example? Now what they are saying?
Yes, sir.
They have taken an example of an increase in income and we have taken an example of an existing income. मैंने क्या किया था? मेरा जो खुद का सैलरी है उसके अंदर ही मैं अपना सेविंग्स कैसे कर रहा हूँ वो एग्जांपल लिया था. And the particular Keynesian theory is giving a certain example wherein if you get an additional amount of income or an additional amount of earning for you. So your salary was rupees 50,000, you get a salary of rupees 55,000 or 50,500, then what you will be doing of that additional 500 rupees. So here in this case, the Keynesian theory, just remember, I forgot to mention the name in the earlier introduction, that is MPC, marginal propensity to consume theory, has been propounded by Keynes, Keynes, Keynes consumption theory. So MPC is equal to percentage change in consumption upon percentage age of meanings. So is also known as the marginal propensity to save. So MPC or MPS is one and the same. So 1 minus MPC is equal to MPS. So here we are coming with the consideration of two terminology, that is marginal propensity to consume and marginal propensity to save. Who can say the difference between MPC and MPS mathematically? देखते किसको कितना समझाएं. From the earlier example, what is MPC and what is MPS?
Sir, MPC is the 500 is extra bonus. Okay, so 500 in he consumed the he spend 80%, and other means 0.8 is saving, 10% saving, and another is spending money. Means MPC is 80% and MPS is 20.
Yes, any other answer? Or is she correct or wrong? You can please comment. Anyone? Good, Aarti, that you tried for. MPC is 0.8 and MPS is 0.2 as per your explanation, right?
Yes, sir.
Anyone? देखते किसको कितना समझा. I cannot minimize the screen, and hence I cannot take the names. Shilpa, you are there?
Yes, sir.
Yeah, I don't remember.
Sir, I can explain through definition, not by mathematically. I don't know.
Definition explanation completed. It's over. Now we want to solve the numerical. You want to. Economics always deals with a calculation, percentage change. We have seen elasticity of demand, percentage change in quantity divided by percentage change in price. Fast.
Sir, there is difference between the consumption and consumed or spent and income saved.
So mathematically, what is MPC and what is MPS? I want the amount, or the figure or the percentage, whatever. Or whatever said by Aarti is correct. Anything. You can comment on her also. Acha, Mansi is there. Come on, hurry up. We have 77 slides for this chapter. Fast. We are just on. At least comment on Aarti, whatever she has said. What do you feel? Whether she is correct, right, wrong? At least she tried for it.
Sir, honestly, I didn't get her.
Aarti, please repeat.
Sir, means in the employees' salary is increased by 500 rupees. Okay, the first his salary is 50,000, and then 500 is he got a bonus. So we calculate in a 500. Okay, 500, and he spent a 400 and save 100 rupees. Means 400 divided by 500 is equal to 0.8. Means 0.8 is a spending money, and 0.2 is a saving money. Means marginal propensity consume is 0.8, and marginal propensity of saving is 0.2.
Okay, now Mansi, your turn.
Yes, sir, I think she is correct.
True. Very good, Aarti. You have tried really perfectly very well, and you have really understood the concept. MPC is 0.8 and MPS is 0.2. So in this way, for each and every individual, you have to identify, you have to calculate about what is your propensity to save a certain sum of money. That is, when your income level increases or whenever your income level decreases, when your spending pattern keeps on changing. That is, you can get a certain income from different levels. You can spend a certain sum of money for different products or different commodities. At every level, you have to identify, you have to calculate what is your propensity to save key, maximum amount of money, what you can save at that particular place or that particular location. In my example, or in my case, what was my marginal propensity to consume or save? That is 1 minus 20,000. That is 20,000 I was expending. That was my consumption, and remaining 30,000 will be my marginal propensity to save. So the reverse situation. Now here in this case, in case of the example given by Keynes, the propensity to consume is also increasing, and accordingly the saving is decreasing. But in my case, my consumption was decreasing and the spending pattern was increasing. Savings pattern was increasing. So diagrammatically, the consumption function is in this particular proportion. So your income level in terms of the Keynes theory is in terms of dollar currency. So because I have taken the diagrams of figures in same way. So here in this case, the figures have been displayed in terms of dollar currency. That is $10,000, $30,000, 20,000, and so on. So as per your consumption increases, your expected income. So whenever your income level increases, so accordingly your consumption also starts increasing. So always 3/4 of expected income. So this particular in the graphical illustration of the consumption function as A is equal to rupees 5,000. So what they are looking for now, what is A? We have seen in the last slide. A is subsistence or minimum level of consumption. Now here in this case, what I was saying for subsistence or minimum level of consumption means itna paisa mujhe lagna hi wala hai. That is my rupees 20,000. My basic essential need, my basic essential requirement or basic essential consumption or expenditure is rupees 5,000. So here in this particular example, the 5,000 is the particular consideration wherein out of this particular consideration, you have to spend this particular sum of money plus 3/4 of the expected income. What was the 3/4 of that particular expected income? That is rupees 500 that you are spending extra. Out of this 500 that you have received extra, what you are doing? You are spending only 400 rupees and you are saving 100 rupees for your future expenditure purpose. So here in this case, it becomes 3/4. So 5,000 plus 3/4, that is 5,000 plus 0.8. So in this way, you have to identify and we have to calculate the marginal propensity to consume or marginal propensity to save. Now shift in the consumption curve, same as we have seen the consideration or the concept of changes in demand curve, that is with respect to the extension in demand or contraction in demand, extension in supply or contraction in supply, increase in demand or decrease in demand, increase in supply or decrease in supply. Same case, the consumption curve also moves from one place to another place. But in case of consumption, it is called as a positive shift or it is called as a negative shift. So now, what you have to see, you have to see from the perspectives of an economy also, you have to see from the perspectives of the government or the industry also. Now, when the people are purchasing more, listen very carefully, if the people are purchasing more, is it beneficial to the industry or not? Is it positive or negative?
Positive, sir.
Positive. Positive.
Why?
Because demand will be
Because the
increased.
industry sale also increase that time, and industries uh, earn the profit because of their products demand also increase in market, and consumers purchase. Yeah.
Keeps on, and there is amount of money demanded in the more quantity, then accordingly it is beneficial for industry. Now reverse example, when the consumption of a particular individual increases, whether it is positive or negative for him.
Also positive, sir.
How?
Sir, individual or in a lot of people, individual or in group of people also, that same effect on industry, because individual also consumption the products, or he buying the products, so he's directly help to that industry, because he purchased something or industry is selling their products, or from that industry also earn the profit. The same condition is for that though.
Continuing to your explanation or brief that you have given, my income level was rupees 50,000 and my expenditure, what am I saying? My expenditure increased from 20,000 to 40,000. Is it good or it is bad?
Sir, is it bad for you? But is it good for our economics or industry?
So what we have to look for, on which basis we are making the calculation, who is your evaluator, whether we are calculating MPC or whether, if you are looking for MPC, that is marginal propensity to consume, then it is beneficial. But if you are looking for MPS, that is marginal propensity to save, then we can say that it is a negative perspectives. So here in this case, positive shift or a negative shift depends on the real income or real assets of a particular individual. So real income in the sense whether your income level is either increasing or whether your income level is decreasing, and whose income level is increasing, whether the income level of an individual is increasing or whether income level of a particular person is increasing, that is industry or a person. So in this way, we have to identify and future expectations of price rises. So what we are doing, if we are expecting that the price may rise in certain future, then what we are doing, we are purchasing an additional sum of quantity in the current position. That is, tomorrow, if you predict that the petrol price may go to rupees 120, today you will purchase the petrol at rupees 100 or 5 liters or 10 liters. That is, you will fill your tank very immediately. So in this way, what happen? Your sudden increase in the consumption is a certain drawback for the industry also. Why? Because they are losing their certain sum of money whenever they are looking for the benefit or a positive shift. quickly. This is the curve that you can see, or that is C. The red color is your standard curve, that is C is equal to A plus BY, and the 45 degrees is your new curve that you can see for vertical interception and slope. So MPC. So major consideration, always remember whenever you are calculating either increase or decrease in the consumption or the expenditure, we have to remember whether the MPC, that is marginal propensity to consume, is either increasing or saving is increasing. So if there is a positive or negative impact on either C or S, both these things has to be identified. This is the first diagrammatic, that is increase or decrease, and the positive shift and the negative shift. Positive shift wherein your consumption is increasing but your income level is decreasing. Whereas in case of a negative shift, your consumption is decreasing but your income level is increasing. So it depends, or it changes from industry to industry, person to person. Clear with this stage? MPS and MPC terms we have taken together today.
Yes, sir.
Yes, sir.
11, 12. Stop presenting. I forgot to mention VCL. The lecture was VCL. So VCL is an internal subject. So we'll take the perspectives of VCL in the month of April, not right now. So we'll complete the syllabus